Hello and welcome to another update video about Tesla. Certainly one of the more interesting stocks at the moment. We can see here on this chart, and I've zoomed out a little bit, that we might have a so-called inverse head and shoulders pattern forming here on the chart. That's also in line with the Elliott Wave analysis, and it shows here a neckline and breakout point at around $300. This is going to be very interesting. Just sort of as a side note, they are not really patterns or structures I primarily use, but when they align with the Elliott Wave count, I point them out. You will remember that from an Elliott Wave point of view, we're tracking here a 1-2, 1-2 setup. And from here, as long as it's holding $176, the focus is on higher prices. Below $176, we have one more chance to find support in an alternative wave count, and we would count this as an ABC structure, but in a wave 1 as well. This is possibly because we are moving in a larger fifth wave, so it would be an ending diagonal in which each of the subwaves is an ABC structure. So this first wave would also be an ABC structure, and then we would just come down a little bit lower, potentially all the way to $129. As long as the $129 level holds, there is nothing bearish on this chart, okay? These are the two bullish scenarios. If I zoom out now, you can see that the preferred interpretation from my end is still that the price, yes, it came down in an A wave of wave 2. The move up was a B wave of this wave 2. And somewhere here we have a chance to get rejected and to come down in a C wave of wave 2. So I've approached this the following way. We already had a potential entry point here. If it comes down lower once more, it would be another good entry point. If not, then fair enough. The trade basically worked. The setup already worked. And it was just a little early that it turned around, but it turned around here at one of our Fibonacci support levels in the trend reversal area. But the primary scenario is that it comes down once more. What I wanted to show you is that in this B wave of the wave 2, it's currently at the $278 level, the 78.6 Fib retracement. You need to understand that B waves, they can always overshoot as well. So even if it goes above the standard resistance level for a B wave, B waves can overshoot. B waves are among the most difficult waves to trade and to analyze. What I also wanted to point out, it's a very similar structure to what we had down here, which I also counted as an ABC structure in a wave 2. And here as well, the price retraced, or this B wave, yeah, so basically the subwave count here would be A wave down, B wave up, C wave down. Also this B wave retraced basically to the 78.6 retracement. As you can see here, it retraced to the top of that standard Fib resistance box. So from that point of view, it looks very similar. It's not too high for a B wave. A B wave can even overshoot a little bit more, but my primary scenario is still one more low here in a C wave, but it's going very interesting. It's getting very interesting. Certainly this move down, which bottomed in August, came down deep enough to complete all of wave 2. Yeah. We just need to mention that all the time. We did that before. And also from a timing point of view, the proportions are looking okay compared to the length of the wave 1. Yeah, I mean, the low could be in, but it's nothing I'm primarily looking for. I consider it. I would also give it decent probability, but it's not the primary scenario. I find it more likely and preferred if we get a clearer 3-wave structure in this wave 2. But yeah, again, the analysis is clear. As long as the $176 level is holding and the price doesn't break below it, we can look forward to a third wave rally, either from down here, if we enter that box once more, or from, yeah, basically here, the previous support level. So not much more to add, but just to point out, we have reached basically a key pivot point on this move up, and the price is just doing what it's supposed to be doing. It moved a little higher after it broke out of that trend line, and it's not even broken above resistance. If it does, a more direct breakout above $300 becomes more likely, but at the moment, without having that evidence, and while the price is still hovering below the 78.6 Fib level, I assume primarily that we will see another low, but very open to the idea it could break out directly. Certainly, we're still tracking bullish scenarios because, you know, overall, the overall context allows for it. It suggests it. And yeah, the parameters are clear against which we can move higher. So that's my update about Tesla. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.